Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. And it's Friday here in Vancouver. The sun is shining and the snow is going away. This is good.
Yeah, the West Coast, from San Diego up to Vancouver and all the way up the BC coast. Snowstorm after snowstorm after snowstorm. We're not used to this, especially around the start of March.
Yeah, well, I looked up the snowfall for this season at Alta, Utah, which really gets snow. They're up to 600 inches of snowfall.
Wow.
This season. And if I recall rightly, Mount Baker, just south of Vancouver in Washington State, that gets all the storms in every direction. I think for a ski area, I think they got the record, maybe 1,000 inches of snowfall in one season. So, anyhow, it's we're moving along.
Our question today comes from Justin in Berkeley. Knowing that Bob's a historian and has deep interest in even ancient financial dealings, I recently read that Roman Emperor Tiberius was forced to offer zero-interest loans to resolve a major credit mess in real estate markets in 33 AD, or he had CE for Common Era, possibly the first instance of quantitative easing. Most of this was spurred on by a major expansion to the outer regions and a sudden requirement by law to reinvest back into central Italy. Financially speaking, in history, are most disasters spurred on by political decisions to rectify the natural flow of capital? Are there any more instances of Roman deflationary crashes? Thank you very much, Justin.
Well, Justin, that's a good one. The 33 AD one is perhaps the best known. But back at around that time, the writer and observer Cicero, he noted, and I'll back up a bit, the Mediterranean basin then, the whole of the sea was ships carrying people, carrying cargoes, freight, goods, retail, wholesale, all kinds of things, and it was really quite a free market. And there were times when the government went crazy and put on price controls. But essentially, it was a free market. So I think in answer to the question about whether booms are provoked by governments with easing credit or not, that's one of these push-me, pull-you things. My view is that there's going to be a boom, there will be a boom, and there will be a bust. And this is where we get back to Cicero, where he pointed out that in the eastern provinces, Phoenicia and whatnot, where there were lesser markets, he pointed out that if there was a financial crisis in that lesser market, it would eventually hit the senior market in the U.S. And we've seen this throughout fairly recent history, the last few hundred years. It shows up where when New York was a junior market relative to London, and the 1873 crash, for example, it was blamed upon problems in the junior market. So, or at another time, Hong Kong blew up and crashed, and then there were problems spreading around the rest of the world. So yeah, the market is a market, and Rome, you had fairly good records and notes made and all that sort of stuff. But I do know that in the work I've done, that the 3rd century in Rome was one of these tyrannical centuries where the authoritarians gained control. They put on huge taxation, and when that isn't bringing in enough, they resort to currency depreciation, inflation. And as Lenin later observed, you grind the middle classes between the millstones of taxation and inflation. So anyways, it happened in the 3rd century, quite the same as what's been going on for the last century. Endless wars, governments essentially declaring war on their own people and funding it all with huge taxation and inflation. And then eventually the economy crashed in Rome, and it was the end of the bureaucracy in Rome, and it sort of suffered a population contraction and economic contraction for hundreds of years. So that's a timely question here. So that answers the question, spurred on by political decisions to rectify the natural flow of. No, that's sort of Mises stuff that they say that the 1929 boom was caused by the Fed with easy money, but you can show their booms going all the way back when there was no central bankers, and the booms happen, and governments are always pressed to try and fix the problem after the event. So thanks for the question.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your attention today. From the Express, Russia braces for civil war chaos as Kremlin opposition votes for Revolutionary Act. Are we going to see another Russian revolution, Bob?
Well, revolution is a severe word. I kind of like reform. And Putin made a massive blunder in going into Ukraine a year ago. He thought that he'd have control of the political capital at Kiev within 2 weeks. He did not understand the resilience of Ukraine people, and their military was fantastic, and the Russian ineptitude and lack of good equipment. So it's a stalemate, and folks at home have had enough. So any headline like this you got to follow, because somewhere the ordinary folk in Russia can reform this crazy Putin and get rid of him one way or the other.
Headline, Wall Street chokes on bad buyout loans.
Oh, yeah. Yeah, the fad of corporations buying each other or buying their own stock back. It became a mania, and companies borrowed huge. I mean, remember we talked about this with Boeing.
Yeah.
They've spent $45 billion buying their own stock, and that was an example of the board of directors speculating in the financial markets. And then they were tight with the money for the proper engineering on the new 737, which two of them crashed. So this then really is a severe condemnation of any of these corporate these companies doing stock buybacks. I've hated it from the start.
stock buyouts at one point used to be illegal, didn't they? Because it was considered stock manipulation.
Well, it may have been, yeah. I'd have to look that one up. Yeah.
Now, I saw this on KTLA Los Angeles, and there's a headline that goes along with it. LA has seen a 3.5% drop in apartment rents, and apartment rents apparently are falling all over the place in the U.S. What's going on there?
Yeah, maybe it might go back to normal where for most of the time, like in the 40s, 50s, 60s, part of the 70s, in the residential rental market where the homes are, well, mainly apartments, the standard number was there would be 6% vacancy rate. And then, of course, recently there ain't no vacancies. It was a negative number, if you could put it that way. So this, the market's beginning to change.
They blame the price or the apartment rents coming down in L.A. on a glut of new apartment blocks coming online this year.
Yeah.
Yeah. Now, another headline, Evergrand fails to win creditors' support as key dates loom. I think Evergrand's the second largest real estate company in the world.
Yep, we've been talking about those guys in China for a long time. And this was just yet another headline about that they're still struggling. They can't make it.
Headline, battery metal prices fall back to earth.
Yeah, we've been doing a chart on lithium. And lithium carbonate, and it reached a high of 600,000 in November, and then it held at, what was it, about 450,000, and now it's below 400,000. So the lithium price is coming down. Two reasons, I think, are that with all of the tout and the high prices for lithium, what happens? It prompts increases in production and supply, which we're getting. And the other thing is that the electric vehicles, electric cars, is just a crazy fad that is essentially not the best economics. So this, I think, the fad for electronic vehicles is probably peaking, and in come hard times, governments are not going to subsidize them, and it was only wealthy people buying them with the subsidy. And then when you go to get a new battery, it's like doing a service job on a Ferrari. So, they're damned expensive, those things.
Well, if you want an affordable electric car, you have to go to China. Volkswagen is making the Viking, which they're selling for $10,000, and it uses a sulfur ion battery instead of lithium.
I'll look into that one, yeah.
I would buy a little bug like that. $10,000 for a new car of any kind.
No.
Bob, anything else catching your eye in the world right now on what's going on with the stock markets and so on?
Well, we are in the favorable season. The big hit, it was a panic down into October, and then from October until May, you can have positive stuff. Mind you, if you're in severe problems like following last December, January, that didn't help much. But when you crash down into October, the seasonal low, then you can look for positive vibes out to around maybe May. And the way we're looking at it is credit spreads have been okay. You got the warning from the yield curve. It's giving us recession warning, but it's not quite clicked in yet. You can have maybe firmer base metal prices out for a little while yet. So, and the other day we got a springboard buy on S&P and the NASDAQ. So, yeah, Positive, perhaps, to May, June. And any of the rallies, as we advised in December, January, a year ago, sell the rallies. And then on the golds, our view is that we're in the early stages of a multi-year bull market for the gold stocks. And we, on the corrections for the gold stocks, we would be buying the dips because, as I say, a multi-year bull market ahead for gold stocks.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.